Okay, everybody, we're going to get started. Good afternoon, everyone, and welcome to today's webinar, Closing the Homeownership Gap with Inclusive Mortgage. My name is Bob Mundy. I'm the manager of Inclusive Mortgage, and I'm very happy to be with you today, especially during Homeownership Month. There's a lot happening this month. As a reminder, this webinar is being recorded, and it will be made available along with the presentation to all webinar participants. I want to start off by saying that Inclusive Mortgage is committed to increasing the wealth of low to moderate income people through homeownership. We do this by offering credit unions in our inclusive network a secondary market outlet. With that said, on today's webinar, we have with us Scott Toller, who is President and CEO of Credit Union Mortgage Association, also known as CUMA. He'll be talking about servicing, as well as our colleague Renee Vargas Martinez, Senior Program Officer here at Inclusive, who will also be talking later about ITIN lending. Both of them will be, again, speaking later in the webinar. Now, before we get into how Inclusive Mortgage works, I'd like to introduce Ahmed Campbell, our Director of Lending Development at Inclusive, who will be co-hosting this webinar with me. Ahmed, why don't you take over first?
And good afternoon, everyone. Apologize for not being able to see me on video. Dealing with a little bit of an unstable internet connection, I think, as a lot of us can attest to getting through a year plus of the pandemic. But as Bob mentioned earlier about increasing wealth through homeownership remains the key by which nearly all households in this country can create and attain wealth. However, several groups, especially those of color, they're not able to participate in the prospect to purchase homes of their own. And historically, homeownership rates in the low and moderate income communities, as well as for people of color, have been significantly lower than other groups, thus making it one of the largest factors of the racial equity and wealth gap we keep hearing so much about. Systemic obstacles to accessing mortgage financing, they're a major reason for this condition.
Yeah, Ahmed, before you continue, it's one thing to talk about it, but it'd be interesting to throw out some statistics. In 2017, 19% of Black applicants and 14% of Hispanic applicants were denied for conventional purchase loans, while at the same time, only 8% of whites were denied. On the refi side, it was even worse. 39% of Blacks were rejected to 23% of whites. So, I mean, the numbers don't lie, certainly.
Well, if that's not bad enough, 60% of CRA qualifying loans in the LMI census tracts, they're made to middle and income borrowers, as well as 29% to higher income borrowers. That needs to change.
Yes, it does. So Ahmed, the question of the day, how do we close this enormous, awful gap?
Good question, Bob. So in many communities, CDFIs, community development financial institutions, are well positioned to help close these gaps by providing home loan services that reduce racial economic disparities and increase individual financial well-being. And that's where Inclusive Mortgage comes in.
Okay, so before we get into how Inclusive Mortgage works.
All right, you're stopping me. All right, go ahead.
Yeah, let's start with a little poll so that we can see where our audience is at here.
Sounds good to me.
Tell me if you can see the first question. Do you currently have a mortgage program?
Look at the responses coming in.
So far, an overwhelming majority has.
Okay.
Okay.
Good representation.
I'm going to end this so we can take a look. So 83% said yes, 17% said no. Okay. It's two different conversations there, but we will try to deal with both. Okay. Okay, I'm going to go on to another question. Are you an approved Fannie, Freddie, or FHLB seller?
Oh, okay.
And the reason that I wanted to ask this question is because we have our regular application process to become a seller. But if you are approved with Fannie, Freddie, or FHLB, we have a streamlined process that makes it a bit easier for you.
I know there's always a method to your madness, Bob.
Yeah. All right, so a little more than half. Okay, that's good. Okay, let me go on to another question. Do you currently offer I-10 mortgages?
I-10s, yeah.
Now we're getting the opposite result. Not a surprise.
This is good stuff, though. This is good.
But a lot more than I expected. Let's give it another second. Okay, so 67% are not offering I-10s. So that's good. We're going to be discussing that further and dispelling some of the fear myths that are out there. And let's go on to our last question. Would you like to offer I-10 mortgages? Let me launch this. There we go. Okay, so far, everybody who's answering is saying yes.
Look at that. Wow.
Okay, we've got, just give it one more second. Okay. And the overwhelming majority here would like to do I-10 mortgages, so that's good. That's good. All right. All right, so that gives us an idea of who's on the webinar today. Before we continue, if you have any questions, just post them in the Q&A. We'll do our best to work through them in the webinar. If we can't get to everything, we'll try to answer them privately after the webinar is over. You'll have our contact information at the end of the webinar. Now I'm going to turn it over to Ahmed, and he's going to tell us a little bit about how Inclusiv Mortgage works.
Thanks again, Bob. And yeah, we actually already got some questions coming through, so you folks aren't shy. I like that. So you've heard the welcoming remarks, and now we're just kind of like run through the agenda. Just going to give you an introduction to Inclusiv Mortgage, then have an opportunity, as Bob mentioned, to speak with Scott Tola from CUMA, and then really get deeper into the weeds about I-10s with Renee, give you an opportunity for some Q&A, and then share with you some upcoming events. Great stuff here happening at Inclusiv. So just a little bit about Inclusiv Mortgage. It was launched back in 2005, and the idea was to establish a secondary market for members' credit unions mortgage loans, really concentrating and focusing on the LMI members, or I like to call the modest income members. By the close of last year, we had a portfolio comprised of about 20 million in affordable home mortgages, originated by, I think, 22 plus CDCUs all across the country. And it's our mission here at Inclusiv to help low-income people and communities achieve financial independence through the credit unions like yourself. And we achieve this mission by helping you, our credit union members, to expand access to affordable home ownership, and to also increase your credit union's recognition as a source of responsible mortgage financing. It also helps you expand your capacity as mortgage lenders, as well as becoming providers of accurate and consistent home ownership counseling. And we do this by offering two of our programs that we believe to be of sound benefit to our members, the Flow program and the Bulk program. And Bob, why don't you share a little bit about the Flow program with our members?
Sure, happy to. So the way the Flow program works is that you originate, process, underwrite, and close the loan to Inclusiv's guidelines, and then within 2 weeks of your closing, we purchase the loan from you. So the most obvious question that we get a lot is, so how do you know we will actually buy the loan from you? And the answer is pretty simple. As long as you follow our guidelines and communicate anything questionable during the process so we can work it out together in advance of the sale, then you should have confidence that we'll purchase the loan. On my watch, we haven't not purchased any loans that were in the pipeline. So let me tell you a bit about the two loans we offer in our Flow program. Ahmed, why don't you go to the next slide. I'll highlight some of the main guidelines, but we can share the full list on request. So you know our guidelines are pretty close to Freddie's. We're a few iterations from there, but if you're familiar with Freddie, then you won't have any problems with ours. The first loan is a 30-year fixed for members with Social Security number. This is our Inclusiv 97, which goes up to a 97% LTV with mortgage insurance that ranges between 6 and 18%. It's a great deal for MI. We partner with Arch. If you're not familiar with Arch, they have two programs. They have AMI for loans typically geared towards Fannie Freddie type lending. And their other program is AMGC, which is more for portfolio type lending, and that's where most of our loans fall. Our second loan is a 10-1 ARM, and that's for members with an ITIN number, goes up to 80% LTV, so obviously no MI required. That loan's attached to the 1-year treasury. The caps are 215, margin is 5%, and the floor is the start rate. So now both those loans have a minimum credit score of 620, max DTI of 45%, require 2% of members' own funds for purchases, 2 months pity reserves after closing, and the loan sizes range from 40 to 250K, but we will go higher in higher priced areas. So you don't have to worry about that. We do offer alt credit standards for members without traditional credit or members with limited traditional credit. Some might have 1 or 2 established trade lines, but not the 3 that we require. This is more common with ITIN members, but you can apply this to our 30-year fixed product as well, up to 95% LTV, but it does require 3% minimum of members' own funds to be insured by Arch. That's Arch's rule there. Normally, we just require the 2%. We'll also work with multiple sources of income, treating them like self-employed and doing a tax average. This is also common for ITIN borrowers. Take, for example, migrant workers. Will go from farm to farm, from job to job, and rack up numerous W-2s throughout the working season. So in that case, we'll treat them as self-employed and do a tax average on them. So that's an average. That's an overview of the 2 loans that we have. Happy to announce. Need a drum roll, Ahmed. For Homeownership Month, we are launching our own Inclusiv Mortgage Down Payment Assistant grants as of today. I'll just kind of go through this quickly for you guys. The DPA grant is a 5-year forgivable grant. Payback will be required only if the property is sold or refinanced prior to the 5-year term ending, and will be prorated based on 60 months with no interest, of course. Grant amounts are up to 1.5% of the purchase price, not to exceed $2,500. Must be a first-time purchase of a 1 to 4 unit detached home, condo, co-op, or a manufactured home, but only if they're converted to real property. We don't do chatels. Grant recipients must meet Inclusiv mortgage guidelines, and the income must be at or below 80% of the area median income. LTVs must be at least 90%. Grants are only good for loans that will be obviously sold to Inclusiv Mortgage, so all loans must be locked before the grant funds are dispersed. And we have a limit of 3 grants per credit union during this rollout phase. And that will change as time goes by, but that'll be to be determined. And let me stop here a second and just check in. I don't know if you've been monitoring the questions, but if we have any questions.
Yeah, nothing yet popping up. We had one earlier on, but we're certainly going to give adequate time to really address any of the questions as we get towards the back end of today's webinar. So go ahead, Bob.
Great. All right, why don't you hit the next slide for me? I'll just go over the rates briefly with you. Before I came on to Inclusiv last year, I started in-house March 2nd, just as we were going into lockdown, which was an interesting time to start a new job, I have to say. And prior to me, our rate sheets were pretty complicated. You pretty much needed a training session to figure out how to price a loan. That has all been changed.
An advanced degree.
Exactly. We have redesigned them to cater to our sweet spot, which is we like higher risk loans. So our sweet spot is lower scores and higher LTVs. Doesn't mean we're not going to buy your A paper loans. We certainly will buy them if you want us to, but we're pretty sure that you could do better on the rate for your members, and we're not paying higher premiums for the A-PICR loans. I'll give you an example. As you can see on the chart there, for a 620 score, the lowest credit score and the highest LTV, 97%, your member is going to get a competitive rate of 4 1/8, and we're going to pay you 300 BPS gross premium. So go ahead and change the slide, Ahmed. The same goes for ITIN loans. The only real difference is obviously the LTV only goes up to 80, and we're about 2% higher than the 30-year fixed rates. And go ahead and switch to the next one. All pricing is for 60 days. There's no pricing hits for loan sizes. We have some modest pricing hits for different property types and deed restrictions, and we work off manual underwriting. One thing I want to make clear before I turn it back over to Ahmed is, again, to sell to Inclusiv Mortgage, you have to apply and be approved. If you're already approved with Fannie, Freddie, or FHLB, we do have a streamlined application process again. Any questions about that, put them in the Q&A. And on that note, I'm going to turn it back over to Ahmed, and he's going to continue with our bulk program.
All right, before we do that, we do have a question, Bob. This is coming in from Valerie. And the question is, are there any other down payment assistance programs to help those I-10 loans reach the 80% LTV requirement? If not, are there any restrictions to a CLTV if a down payment loan is acquired elsewhere?
Okay, CLTV goes up to 105%. And I really can't speak to other down payment assistance programs. I think, we have done quite a few ITINs in North Jersey where the prices are quite high. And they have partnered with some investors that have come in behind our investment to keep us no more than 80. So I think you're going to have to look and see where what kind of money is available where you're at. We will do CLTVs up to 105%. So hopefully that helps. I don't know if you can add to that on that.
No, I think you covered that. We are looking, I would add that we are looking at other down payment assistance programs that could also be combined with the Inclusiv down payment assistance program. So I would say is that we are open to hearing from you. If you've got some existing, ideas or some recommendations. I see Scott is actually has a question of whether or not we would accept loans delivered with down payment assistance from providers other than Inclusiv.
Absolutely, yes.
Exactly. So, yeah, without a doubt. Go ahead, Scott. Go ahead.
We wanted to just add to the down payment assistance pool and to be contributing in that way to help as many low-income people, get into housing as we could. But yes, absolutely, as long as it doesn't go over 105% CLTV.
Great. Okay, so Bob shared a lot with you about our flow program. I want to talk to you about our bulk program. And this is really where we'd like to see a lot of our new credit union members that onboard get started, because we purchase bulk loans from your credit union. It's a streamlined process, and it really helps you get a price quote early in that process. What we're really looking at is, doing our analysis similar to what you might do if you were selling to a Fannie or Freddie. But we're looking at the basics, what's the origination note rate? What's the current market rate? And the risk of the loan pool. But this is really designed to help your credit union increase liquidity, to address the overarching concern of interest rate risk, especially talking about holding on to fixed rate loans in your portfolio, because we've seen that, the gap and the mismatch, between asset liability durations, market volatility. These are the things that keep the folks in the finance and the CFOs, up at all hours of the night. So again, the whole idea is to really be able to provide your credit union where you have seasoned loans. And what I mean by seasoned loans, we're talking about loans that have been on the books for at least 12 months and they're performing. Again, repeat, and they're performing. Those are the loans that Inclusiv is interested in buying. Bob really shared with you about, where our sweet spot is. But when it comes to the bulk program, Bob, correct me if I'm wrong, but we buy down to 550 credit scores
Yes.
and up to 50% DTI
Exactly.
on your season loans. Again, so there's a greater opportunity for our credit union members to sell loans, but you're not butting up against that 620, which for some is going into deeper waters than you probably want to keep on the books, for a long period of time, especially looking at concentration risk. This could be a solution for your credit union. Again, so if you're interested in seeing more about this, you'd like to take a test drive, we can send you a tape layout. You put some loans in and we'll turn that around for you in pretty short time. And you can see if this would be a good opportunity for your credit union, to get your feet wet. And again, I say this, try the bulk even before you did the flow. And then that way you kind of get a feel for how we work. And perhaps the most important part, the takeaway I want you to have is that we're accessible and we like loans that make sense. Credit scores are credit scores, DTIs are DTIs, but nothing beats a loan that makes sense. With that said, Bob, I'll turn it back over to you.
Ahmed, before you switch to the next point, I just want to say about the 12-month seasoning. We do prefer them to be at least seasoned for 12 months, but we will do less seasoning. We'll do it with temporary recourse. So
see there, look at that flexibility on display.
Yes, and the recourse will come off, once the loans hit the 12-month mark. So that is a possibility. There's a lot of exceptions to be had. So,
well, and again, communication becomes the basis for cooperation, I like to say. And we'll accept applications really on a rolling basis. If your credit union is interested in selling the qualifying mortgages to us, as Bob mentioned, we're going to assess your credit union's prior mortgage lending experience and work with you to help identify the qualifying mortgage loans. If you want, to service those loans that you sell to us, there's an additional application process. It's not painful, not at all. But if you don't wish to service, then those loans would be serviced by CUMA. And that's where Scott comes in as either the primary or the master servicer.
Yes, we've been partnering with CUMA successfully for many years. How many years has it been, Scott?
It's been actually a little bit over 5 now.
Okay. All right. And we've been doing very well with you guys, and we certainly appreciate it. So why don't you start off and tell our participants how our partnership works and a little bit about what you guys do.
Well, thank you guys for including me. It's been a great partnership over those 5 years. We've enjoyed working with you guys and your credit unions. So essentially, for the first part of this, for the regular servicing, not the master servicing, these are credit unions that are going to originate, process, underwrite, and close their mortgages, sell these mortgage loans to Inclusiv, but they're not going to handle the servicing. We'll take over the servicing from there, collecting the monthly payments, handling the escrows, that being the real estate taxes, homeowners insurance, etc., and any loss mitigation if necessary. CUMA handles all the monthly reporting and all the monthly remittances to Inclusiv, so we handle everything from start to finish on the servicing. We also offer master servicing, and for those of you maybe not familiar with the master servicing is, it's kind of a hybrid between servicing and not servicing. And what I mean by that is the credit union would originate and process and underwrite and close the loans, sell the loans to Inclusiv, but the credit union would actually service the mortgage loan. But they would not do any remittances or reporting directly to Inclusiv. Those credit unions report to CUMA and remit any funds collected to CUMA, and then we combine all of that and we do one massive report to Inclusiv. So it just makes things, we're kind of like the central collection point for the monthly payments and the and all the reporting. So it gets one set of payments and one set of reporting on the master service loans to Inclusiv each month.
Okay. So there's the two options. There's you can sell the loans to us, servicing released. So you'll do all of the servicing requirements for that and act as the servicer. And then there's servicing where the credit unions retain the servicing in-house, and at which point you become the master servicer, and they're going to remit and communicate everything that needs to be communicated to you, to CUMA. and then you're going to report to us. I want to say that servicing is another thing that you have to apply to do. It's a little bit more difficult to get approved to service with us. There's a whole process that you have to go through. But if you are Fannie, Freddie, or FHLB approved to service, then that again is a streamlined process. That's pretty much signing a few forms and you're ready to go. So Scott, now CUMA offers a lot of other services, and I know we've just contracted you to kind of step up the services that you're performing for our membership. So you want to talk a little bit about the processing and underwriting part of it?
Sure. So for many of our credit union partners, we've got about a little over 100 credit union partners, all scattered across the United States. And for those credit unions, we do a little bit of something different for each one of them. There are some credit unions, we do everything: originations, processing, underwriting, closing, and servicing. Up until this point, for the last 5 years, we have just been a servicer and master servicer for Inclusiv. We've just now gotten to the point where we are now providing processing and underwriting and closing, as well as the servicing services. So for those credit unions that want to originate the I-10 loans, the credit union would still originate. You still would need to be approved directly with Inclusiv. There would be a separate agreement between the credit union and CUMA, and that would set up the agreement for the credit union to originate these loans. They would be turned over after originations to CUMA. CUMA would process them, we'd underwrite them, and we'd close them, pass them back to the credit union. Credit union would sell them to Inclusiv, and then we would take over the servicing from there. Right now, we're not offering the origination side. We're also actually working with Bob and Ahmed to eventually, hopefully later on this year, to be able to provide the origination services for these loans, the I-10 loans, as well as the processing, the underwriting, and the servicing.
Okay, so right now we're set up so that if a credit union with an established mortgage department, they want to outsource their processing and underwriting to you guys, they're going to do the pre-approvals in-house, lock the rate with us, and then send the file to you. And you guys are going to do all the processing and underwriting, do the disclosures, and do all of the processing that's involved, underwrite the file, send it back to the credit union to be closed, and then the credit union prepares the file to be sent to us.
Actually, I think we're going to do the closing on those loans, because since we did the processing and the underwriting, and we have the loans in our system, and we've done all the disclosures, we're also going to do the closings.
Okay, good. Thank you for clarifying that. How long does it take that the credit union wants to take advantage of this service? How long does it take to get them set up with you guys?
Right now, we're running about between 60 and 90 days. We've got a number of credit union partners in the onboarding, various phases of the onboarding process, but generally 60 to 90 days.
Okay, that's good. And we'll see if anybody has any questions, just put them in the Q&A and we'll handle them while we're talking to Scott here. What about the cost to the CU, to the credit union?
So we charge a flat 1%. So 1% of the loan amount. We know, of course, on some of the smaller loan amounts, if you get some of the smaller loan amounts, and I don't remember what our threshold is, I think it might be 75,000. So below 75,000, we charge 2%. But for the loans above 75,000, we just charge a 1% fee for the processing and the underwriting and the closing. And then the servicing fee is a separate fee, that's 25 basis points.
Okay. And that's a fee if the credit union retains servicing in-house, then they'll be making the 25 bips.
That's right. Right.
Okay, good. Ahmed, are you checking the Q&A? Do we have any questions on the servicing end of this?
Actually, yeah, we have some. Well, a general question actually is that can they get links for the programs that we're talking about in the chat? And I just wanted to share with everyone is that this presentation is going to be shared with all participants. And in addition to that, we'll be getting out to you the materials for the new down payment assistance program. And again, if you want to take a deeper dive with us, where we can actually review the guidelines that we have, getting into the weeds of this, we'd be more than happy to get a request from you, and Bob and I will actually set up that time. And that can also include, Scott, if your credit union is also interested in CUMA's options.
Right. Yeah, I saw that one question in the chat. We don't currently have our guidelines online, but our contact information will be up at the end of the webinar. And if you want to just jot it down now, it's mortgage@inclusiv.org. I'm sorry, mortgage@inclusiv.org. That goes to the whole mortgage team here at Inclusiv, and just shoot us an email, and we're happy to send you the guidelines. So
Absolutely.
And Scott, I think, do you want to put your, like, my other question would be, how does the CU take advantage of your services?
I guess, Ahmed, if you could just put my email address out there on the Q&A or the chat would be fine.
Absolutely, absolutely.
So just reach out to me, and either myself or Sean Connell, who's our credit union coordinator. One of us would reach out to the credit union and have the discovery call, and then see where we go from there.
Okay.
Sounds like a plan. Hold on. Yeah, let me actually get this out here for everybody. And Scott, I didn't hear you say it, but you know, I want folks to also know that CUMA is credit union owned. So you know, if you just let folks know that, you know, they're not going to be you know, having their mortgages, you know, sold to Inclusiv, then their members dealing with some strange entity out here that all of a sudden is going to result in their members complaining about getting extended warranty calls at all hours of the night. Just share a little bit about CUMA itself.
Well, that's a very good point, Ahmed, because in the real world, you know, you never know what you're going to get from the servicers that are servicing your mortgage loans. So CUMA, Credit Union Mortgage Association, was formed back in 1978. No, I was not here when it was formed. So we were formed by credit unions. We were formed initially by 8 credit unions. Today we're owned by 51 credit unions. A lot of them here in Virginia, Maryland, in the DC market, but also some all around the country. So we are owned by credit unions, and we exclusively deal with credit unions. We don't have a division that works with small banks or
that makes a difference. Yeah,
realtors. I mean, 100%. We serve the credit union community 100%.
That's awesome. That's awesome. And again, you just wanted to really share that, because having sat in the seat of many of our participants, you know, you want to sell, but that member, you know, that you want to hold on to that member. You know, that you want to make sure that, you know, as you're selling that mortgage, you're selling those servicing rights, you know, that's also a piece of an extension of the credit union's brand. So, you know, we want to take care of that.
Yeah, that's exactly what I was just thinking, that you are actually become an extension of the credit union, which is fantastic.
Absolutely.
Yeah. All right, there's no more questions. I would like to thank you, Scott, for being with us today. If anybody has any more questions for him,
definitely.
Again,
thanks, Scott.
His email is in the chat box, and we can always connect you as well. Okay, so now we're going to switch gears back to ITIN lending. There's been a lot of buzz happening in the industry around ITIN loans, and there's also a lot of fear around getting an ITIN program started. So as I mentioned in the intro, we also have Renee Vargas Martinez on the webinar to talk more about ITIN lending. Hello, Renee. I want to encourage you to ask questions in the Q&A, and we'll do our best to get to all of them. Renee and our colleague Pablo did a fantastic ITIN webinar recently, and I think you guys changed the whole format of it because there were so many. It just turned into a massive question and answer session, which was fantastic, and I sure learned a lot from that webinar. It was great. So go ahead and introduce yourself, Renee, and talk a little bit about ITINs.
Thank you so much, Bob and Ahmed. It is a privilege to be here. It is not, you know, it is not normal for me to be presenting to mortgage officers or people that are knowledgeable about mortgages. That for me is kind of a different science. And honestly, I do admire all of you for what you do, because I probably wouldn't get past the first step there. So my name is Rene Vargas Martinez. I am a senior program officer here at Inclusiv, and I work throughout all of our financial inclusion initiatives, but with a focus on our Hispanic outreach initiatives, one of them being the Juntos Avanzamos program. I'm going to share a presentation really quick. Give me just 1 second here. Just to let you know quickly about the Juntos Avanzamos program, because that is the reason why we've been so engaged with ITIN lending. So give me 1 second. There we go. Can you see the presentation? Yes. Okay, excellent.
Yes.
All right. So Juntos Avanzamos is a network of credit unions that are committed to serving and empowering the Hispanic community and the immigrant community in the United States. So today there are 112 credit unions, but the reason why I mentioned Juntos Avanzamos in a passing way is that one of the main requirements for a credit union to be able to be part of the Juntos Avanzamos network is to offer ITIN lending. And that can be consumer ITIN lending or mortgage ITIN lending. Now, mortgage is a bit more of a niche thing and a bit more difficult. It's not something that we see across the industry as much as we would like to, but the credit unions that do engage in IT mortgages are really successful and are really able to enter into the Hispanic market and to better serve the Hispanic community because they can offer the whole ladder of services from an account to the dream of homeownership. So I just wanted to mention that quickly and then move over straight to talk about ITIN lending. Now, I saw in your poll initially that many of the credit unions here are already doing ITIN. Now, for those of you who don't know, an ITIN is pretty much issued to any resident that wants to have an ITIN and cannot have a social security number. So basically, it's an identification number for people that cannot submit their taxes using a social security number, but want to submit their taxes. And so they're assigned an ITIN number. Normally that number starts with 999, and it's different from a traditional social security number. Now having an ITIN mortgage number doesn't mean that the person is authorized to work, but people decide to independently to pay their taxes and contribute to the US Treasury. Doesn't matter the immigration status of the person, if it's regular or irregular, they can get an ITIN number and pay their taxes. Now in 2003, ITIN holders were allowed to open accounts at financial institutions, and many financial institutions throughout the United States actually accept ITIN to open accounts, and they also accept alternate forms of ID for account opening. So technically a person can go into your branch to open an account and they don't need to have a social security number, and they could have a matrícula consular or the passport from their country, and they can actually open an account and there is no issue whatsoever regarding compliance. As long as the credit union can make sure that that person is who they say they are, then that's it. Now, in the US, there are over 11 million unauthorized immigrants, so this is a pretty huge market. And generally speaking, when you talk to somebody that is a first-generation immigrant or that has been here, they have family and or Hispanic, they have family that might not be here with a regular status. Now, since 1996, the IRS has issued millions, really more than 20 million ITIN numbers. Now, this initially this started small. Some local banks and credit unions in Illinois and Wisconsin started to offer ITIN loans and mortgages, and then it has pretty much taken off. And now there are hundreds of credit unions throughout the United States that offer either ITIN loans or ITIN mortgages, or a combination of both. And they are always different. We talk about ITIN lending programs, but sometimes, and what we generally recommend is for the credit union to just have one loan program that includes ITIN and extends the possibility for those members with an ITIN to be able to have access to the same loans and have a credit score and their risk be assessed just based on their credit score and their income verified, using the traditional income verification guidelines of that particular credit union. Now, there are credit building loans for ITIN, payday alternative loans for ITIN. There is a lot of ITIN auto lending, and many jurisdictions actually do not require a person to necessarily go into their immigration status to get a driver's license and get a car. And actually recently, as you all know, ITIN was extended to Paycheck Protection Program loans. In the final round, business owners that had an ITIN could actually get a PPP loan. And of course, mortgages. And those are the ones that we love to see, because it really means that the credit union is taking it there. And there are differences, of course. There's the issue of insurance of the mortgage. It's non-conforming. You can't. But as Bob said, we do have an IT product that can help you, work with those different concerns you might have in terms of that of an IT loan. And having it in your portfolio for a long time, even though and I'll talk about NITs now, even though ITIN loans are really stable loans and have very low delinquency. Now, there are several myths that we encounter when we talk to credit unions about ITIN lending. The first one is, wait, you cannot lend to somebody that does not have a Social Security or does not have a federal ID. And that's actually a myth. The reality is that the NCUA has published several opinion letters that say that you can actually accept alternate forms of ID at account opening, and that is okay. And hundreds of credit unions do that in different markets throughout the United States. Even in states such as Kansas, from Kansas to Texas to Oregon to New York City and California and the Midwest, this is something that is pretty much accepted nationwide. Another one of the myths that are related to ITIN have to do, with compliance requirements, and pretty much it is the same thing. ITIN lending is pretty normalized. We do have credit unions that do not have ITIN lending policies. Their lending policy includes ITIN, and it's the same rates and the same everything across the board. Instead of taking a Social Security number, they just take an ITIN number and move from there. And of course, there are differences in income verification, and Bob can speak a bit more about that because our ITIN mortgage program includes those differences, and they're part of the general underwriting. But this is something that has become traditional in many markets. Here in New York City, it's just ITIN is, if you walk in at a Juntos Avanzamos credit union here, having an ITIN is just like having a Social Security. You're treated the same way. There are no differences in any aspect of your relationship with that financial institution. Now, the other myth that we find that I think is the most prevalent is this notion that ITIN loans are risky. Because you think, well, what happens if the person leaves the country? If they go back to wherever they immigrated from, then how am I going to get them to pay? That loan defaults, it is going to be a problem for my books. And what we have found with the experience of hundreds of credit unions that are part of the Juntos network and other credit unions that do ITIN is that their ITIN lending portfolios have a lower delinquency than their Social Security portfolios. And one of the reasons is that generally people really appreciate the opportunity that you're giving them to create credit and build wealth in the United States. And they make sure, no matter where they are, that their obligation to you is satisfied, and they do pay those loans. And this is, and then we can share data around that as well. And actually, there is data, and all this, it's just right here on the screen, some of the different studies we've done. One of them was a study that we did with led by the Filene Policy Works, which is now known as by Clarity, Coopera Consulting, and of course us at Inclusiv. It's pretty much called the ITIN Lending Guide, and it's an implementation guide that helps any credit union that is interested in going into ITIN to understand how to implement ITIN lending at an operational level. And it includes information about compliance, about cultural considerations. It includes the analysis of more than a dozen credit union portfolios that engage heavily in ITIN, and how those portfolios perform and how beneficial they have been to the credit union. And so I'll just let you the link there. Maybe I can put it in the chat so that you can all click on it and download it. It is really a good read and will dispel any fear or not fear, just lack of knowledge that you might have, which is understandable, about ITIN lending. Now, and the good thing about ITIN lending is that really it doesn't matter who you're serving. It can be Latinx, it can be, you know, immigrants from Slavic countries. It can be anyone, and as long as they have an ITIN number, that market is open to you, and you can serve them and help them get their loan, and then of course you can grow alongside them. And of course, as Bob said, we recently had an ITIN webinar around ITIN. We misleadingly and purposefully called it ITIN lending programs, but the truth is there are no ITIN lending programs. You know, you just have a lending program and you accept ITIN. That's all. But it really worked. We had over 100 credit union executives, and as Bob said, you know, initially we had this like very strict script we wanted to follow, and then we had to drop it because the amount of questions was just crazy. But there is a lot of interest in the industry, and you have the link there if you're interested in doing that ITIN lending webinar and seeing it and hearing from practitioners from Point West Credit Union in Portland, Latino Community Credit Union in North Carolina, and Marine Credit Union in Wisconsin. And so that's it from my side, Bob and Ahmed.
Yeah.
I don't know if you have any questions.
I'm glad you had that page up there about the myths, because you know, it was so interesting. And your last one, you know, what do you do if the person gets deported? I wasn't familiar with ITIN lending when I came on to Inclusiv, and that was the first thought that I had was, okay, we're going to loan to somebody and they're going to get deported, and then what do we do?
Bob, I used to be a loan officer for like 4 years, and when I started working on Inclusiv, I said, what? I never crossed my mind that this, you know, was possible. And that's one of the first things that came through. Well, how do I collect?
Right.
But then, you know, if somebody goes to jail, how do you collect? You know,
But,
so somebody goes bankrupt, you might lose you know, part of.
of course.
Right. It's
Of
the
course,
risk of doing business, right?
It can happen to anyone. But one thing that I learned in that webinar was that you really have to be looking at the culture, and it's a family culture. And it was very clear in your webinar that, you know, the one woman said she has the biggest office of anybody in her company, because when somebody comes in to talk about ITINs, it's not a person, it's the entire family comes. And they're all, you're laughing, but it's true. And they're all participating in the loan process, and they're all contributing to it financially. So if somebody gets deported, the other ones are stepping up and contributing more. But it's a family affair. And I'm telling you, the risk is really, it's a paper risk, because we found this with our portfolio, and your credit union panelists said, you know, one of them said no foreclosures, and he's been doing it since I think 2008.
Yeah.
And the delinquencies are almost, you know, almost nil.
Yeah.
You know,
again,
so
one culture sees home ownership as a privilege, and over here on our side, we see it as a right. Clear distinction.
Exactly.
And before I go, it's important to know that, you know, ITIN holders, they're here independently of if their situation is regular or not. They have an ITIN because they want to pay taxes. They want to contribute and give back, and are working here and generating economic activity. So I think that it's terrible, you know, that, you know, because we don't know the process, and I say this because this was my experience, that we could inadvertently be leaving people out of the door and not giving them the service that we want to give them as credit unions, because that's, you know, what we're here for. So just wanted to finish with that and encourage everybody to really explore ITIN lending. And, you know, our mortgage department has a great product for mortgages. If you're interested, just talk to Ahmed and Bob, and I'm sure they'll hook you up.
Yeah, and the bottom line is, you know, you just have to decide what kind of risk, you know, what kind of comfort level you have. You know, because some people are doing exactly the same thing, you know, that they're doing with their Social Security number, the same programs, the same, you know, some of them are going up to 97% LTV with no MI. You know, that's, you know, they're comfortable with that. We're going up to 80% because we can't get MI over that. So, and also, I think what stops a lot of credit unions from starting is that they have it in their head that, you know, we don't know how to do the process. Somehow the process is going to be different. And really, the process is exactly the same. The only real differences are the IDs that you're going to get. You know, we require either the ITIN card or the IRS ITIN letter, and one form of ID, which can be the passport from your country, your visa, matricula, or a state ID if your state, you know, issues those. So, you know, you're going to get a different IDs, and there are some differences in the underwriting. We started the alt credit standards when I came on because I did a lot of work with Actors Federal in New York, and the average actor might have, you know, literally 200 W-2s in a year because of all these one-day jobs that they have, right? So they're not self-employed, but they're kind of between a rock and a hard place. So we developed a system where we just treat them as self-employed, do a 2-year average, and you know, we had no foreclosures. I mean, our delinquency rate was almost nothing when I was there as well. So we offer that for our ITIN borrowers now, which you know, can go to anyone, you know, certainly if you have a social security number as well. And the other difference would be in credit. You know, we're offering alt credit standards. So, you know, because ITIN borrowers, some have established credit and some don't have any, you know, but they've been in the country long enough to have alternative type docs, you know, phone bills and utility
Buy here,
bills,
pay here. Yeah. People
rents,
that actually,
whatever.
exactly, paying a
You know?
dealer for a car, but they actually have evidence that they've been making those, you know, consistent payments to an actual entity. So again, those are many options. I think what I was also looking at as you guys were talking, I'm saying, okay, well, you bring all this back around again. And for the credit unions that are concerned also about risk, this is where Inclusiv comes in. You can start an ITIN program off, sell the loans to Inclusiv. You know, we'll do the servicing.
We'll assume the risk.
We'll assume the risk, exactly. And you can watch and we can tell you these are how these loans are performing. Then once you get to the capacity and then you've identified that this is the concentration risk by product that you want to have in portfolio, then sure. But at least you're able to launch your program. You're able to actually address the community. And in some cases, be the leader. You know, there's everywhere where there's a financial desert, there's an opportunity for your credit union to be a leader. So, you know, I'm always just looking at crisis saying, presenting opportunity. You just have to have the right glasses on and actually see it.
And Scott from CUMA can process and underwrite your ITIN loans.
Look at that, the circle of life. You're muted, Scott. Scott, you're muted.
Yeah, I don't see his.
As the servicer of these loans, we can attest to the fact that the low delinquency rates, because what Renee was talking about, you know, we have other credit unions that do ITIN loans, do them through CUMA. They don't necessarily sell them to Inclusiv. They put them in their portfolio. But even those credit unions experience a lower than the normal delinquency with those loans. So it's a great product.
There are credit unions that don't want to sell them. They're like, we love this. This is great. Yeah, they love the portfolio.
They're
Like, hey, you know,
bring it on.
For others that are starting, you know, I think that it's good to know that you can sell, you can sell it so that, you know, so that you can get that experience. And then afterwards, you know, when you see the results, you decide what you want to do.
Decide what you want to do. Decide how low you want to go.
Really up to you.
Start with Inclusiv, get your sea legs, then portfolio it.
Right. On that note, I think we're gonna stop. We're at time now. I don't want to take any more of your valuable time. Ahmed, why don't you tell us what's coming up, upcoming events? You're muted, Ahmed. There you go.
As usual, yeah. My wife says that all the time. You're muted.
That's an ear mute.
Exactly. I just want to remind everyone of Inclusiv's virtual conference 2021. Mark your calendars for September 21st through 23rd. This conference this is your conference. This is your time. This conference is free. I think free. Exactly. For a change, something is free. But we welcome all of you to join us at our virtual conference. again, this is a community. This is your community. Inclusiv is you. And we just really just appreciate, the time that you've taken out today. Bob, I'll go on, but I'll just turn it back over to Bob after making this announcement.
Yeah, I want to thank Scott and Renee again for being with us today, partnering with us on this webinar. Really enjoyed having you guys on it today. I want to thank all the participants for joining us today. If you have any additional questions, would like more info, or would like to apply to sell to Inclusiv Mortgage, the info is up there. Just send us an email to mortgage@inclusiv.org. Let us know you were at the webinar. Take care, stay well, and we hope you'll consider Inclusiv Mortgage as your secondary market outlet, or at least one of your secondary market outlets. And hopefully we'll see you in September for a free workshop.
Mahalo.
Thank you, guys.
All right.
Take care, everybody.
Bye, everyone.